As Brexit fears reverberate around the world, where is our first guest finding value? Let's check in with Robert Rountree, global strategist of Eastspring Investments. Welcome to Investor Insights. The fear and uncertainty gripping Brexit and its implication is such that there's a lot of talk of global central banks about to unleash helicopter money. But we're already in a world where more than $10 trillion of sovereign debt is in negative territory. So what is that going to really mean for investors out there?
More concern, I guess. It sounds flippant, but the reality is, you're right. When you look at the monetary growth globally and how that exceeds nominal GDP, there's already sluices of money out there. And of course, that money is going to find a home. And of course, that money will make things more volatile.
The situation is such that yields on the entire Japanese bond complex have fallen below 0.1% for the first time. And there's also talk in Japan about a huge stimulus package, easing, whatever you call it, to the tune of 5% of GDP. Is it going to work? After all, there is so much pessimism and doubt over Abenomics and also the BOJ's negative interest rate policy.
You're talking to somebody who's been skeptical of this all along. So to me, throwing more money at it, I don't think is going to sort the problem out. I differentiate very, very clearly between the companies, which are actually looking in very good shape, and the economy, which isn't. But to come to your point, I think what will be necessary and what is absolutely vital with Japan is that you see wage pressures start to rise and people start getting money in the pocket. That's the problem. There's no spending power.
Why should investors buy into the valuation story now, even though they might be world-class companies, especially as the world becomes more defensive?
I don't think you can go wrong by buying value because value comes out in the long term. And what we've seen over the last couple of months, since last August in actual fact, is that the Asian markets have moved very much in tandem with the world markets, ignoring what's going on in Asia. Now that throws up value.
Equities tend to be in difficult, tough situation, especially in a defensive market. They can rally, but these rallies tend to be short-lived or rare. I mean, for instance, just before the height of the European debt crisis, European equities rallied. But then again, that was short-lived and all of the gains were wiped out.
Yes. Well, again, it comes back to where those drivers are, and it comes back to the liquidity. So until you actually see solid growth coming through, you're going to remain in this period of volatility and switching back between asset classes, which is one reason why US high yields are so attractive. In a low growth environment, US high yields generally do very, very well.
How much caution should investors exercise when getting into US high yields in light of the fact that even the commodities complex, with an exception of gold and precious metals, oil, all of that stuff is looking pretty vulnerable?
It is, there's no doubt about it. But I think to a large extent, high yields have been inoculated against the oil virus. We've actually seen what would happen. We saw contagion last year. That contagion effect has now worked its way through. So the fact that the high yields actually bounced back, I think was symptomatic of the fact that people had basically discounted the oil factor in the bad news.
China isn't quite seen as the safe haven anymore. The renminbi has been on a weakening trading band as well. And many investors remember the havoc that ensued in August last year, early this year, whenever the Chinese renminbi weakened. There was so much investor panic.
To me, with China, I'd be looking very much at the return on capital employed, which is still falling. Now, when you've got a liquidity-driven market, that's the last thing people are looking at, which they should be, because once that starts to turn, then a lot of these fears surrounding China, which are liquidity-induced, will actually disappear very, very quickly.
Okay, well, we'll leave it there for now. Robert Rountree taking us through his thoughts on what is value out there.